Crypto fam, welcome back to PhatBear Pod. I'm your host, PB. Today is a slow Saturday, as weekend usually is after big moves. Bitcoin's up a cool grand, chilling at 83.5K. The total crypto market cap took a 1% haircut, dropping to 2.67 trillion. But Bitcoin slice is still the fattest at 61.9% dominance. Now, let's talk volume. 24-hour trading's flat as a pancake at 93.1 billion. No big moves, no wild swings, just a bunch of traders staring at their screens. Meanwhile, the Fear and Greed Index ticked up 2 points to 27, from terrified to slightly less terrified. For alt performance of the day, the top winners are Big Time, Bounce, Fun Token, and Renzo. The biggest losers are EOS, Curve DAO, AI16Z, and Usual. Now, we're stepping out of the crypto market to talk about Trump's shiny new tariffs. As of today, U.S. customs agents have started collecting Trump's big, bold 10% tariff on imports from damn near everywhere. We're talking seaports, airports, customs warehouses. The whole shebang kicked off just 1 minute past midnight, because apparently that's the perfect time to flip the bird to global trade. This isn't some gentle nudge to renegotiate. It's a full-on sledgehammer to the post-World War II system of let's all play nice with tariffs. The baseline's 10%, hitting countries like Australia, Britain, Colombia, basically anyone who's not Canada or Mexico, who dodges round thanks to a fentanyl-related 25% tariff already in play. But don't get comfy next week. 57 bigger trading partners get slapped with reciprocal rates from 11 to 50%. China's catching a 34% gut punch, bringing their total Trump tariff tab to 54%. Vietnam staring down a 46% levy, probably regretting that Ho will take China's supply chain scraps move. Oh, and the EU? They're getting a 20% haircut. Because why not make everyone mad? Global markets are losing their minds. Trump dropped this bomb on Wednesday, and by Friday, the S&P 500 had shed $5 trillion in value. $5 trillion. Enough to buy a small country, or at least a few percent of Bitcoin supply. Oil's tanking, commodities are crying, and investors are piling into bonds like at the Black Friday sale on safety. Meanwhile, Trump's shrugging it off, telling reporters markets are going to boom eventually. Sure, Don. All right, enough about old finance. Let's talk news and the future of finance, crypto. Circle's decided to delay its much-hyped initial public offering, originally slated to kick off after filing with the SEC on April 2nd. They were all set to step onto the New York Stock Exchange, but as of today, they've pumped the brakes. Why? Well, they pointed to escalating trade tensions sparked by Trump's tariffs. The market's throwing a tantrum, S&P 500's bleeding, volatility spiking, and Circle's not the only one ducking for cover. Big names like Klarna and Chime are also postponing their IPOs, probably because no one wants to debut when investors are panic selling. Trump's trade war 2.0 is shaking things up. Those tariffs we covered are rattling global markets, and Circle's worried the fallout could tank their debut. The geopolitical instability will put pressure on USDC's dollar peg. Circle's playing the wait-and-see game, hoping the storm blows over. Next story. Brazil's Superior Court Justice unanimously decided that crypto isn't just for buying Lambos or losing your shirt on a meme coin. Nope, it's now fair game for debt recovery. As of today, judges can tell crypto exchanges, hey, freeze that guy's Bitcoin. He owes his bookie 50 grand. The court's memo basically says, sure, crypto's not legal tender, but it's a payment method and a store of value. So let's treat it like the grown-up asset it pretends to be. Translation? Your alt's bags aren't as untouchable as you thought. This ruling's a big deal because it's piggybacking on Brazil's existing laws. Judges already had the power to freeze bank accounts and yank funds without even telling the debtor, like some financial ninja move. Now, crypto's under the same hammer. Why is this happening? Brazil's crypto scene is popping off, second only to Argentina and Latin America for adoption. Locals are stacking sats and stablecoins to dodge the real's slow bleed, and the courts are catching up. Exchanges are now on the hook to comply. And if you're hiding assets in a cold wallet, good luck. Judges can still sniff you out if they've got the will and a decent blockchain sleuth. Remember Pi Network? This thing was the golden child of mobile mining. Millions of pioneers tapping their phones, dreaming of Lambos, all while the team hyped it as the future of crypto. Yeah, well, that fairy tale's hitting a rough patch. Pi is facing a full-on revolt from its community and devs. The big beef? Delays in approving Know Your Business, KYB applications, which are basically the golden ticket for projects to build on Pi's mainnet. Without that, it's like showing up to a party with no invite, awkward and pointless. Take PiDAOSwap, a decentralized exchange that got tired of waiting around. They waited over 2 weeks for KYB approval from the Pi core team and finally said, screw it, we're taking our NFT project to BNB chain. Can't blame them. 15 days of radio silence is an eternity in crypto. The community's not just mad, they're done. Users are screaming about stalled migrations, unverified coins piling up, and a mainnet that's technically live but feels like a locked VIP room nobody's invited to. And the Pi core team? They're out here dodging questions like Neo in the Matrix. Time to see what's cooking in the DeFi category. We got the Pectra upgrade on the horizon for Ethereum, slated for sometime this year. It's going to be the next chapters for account abstraction. In a nutshell, it's Ethereum trying to grow up and make its wallets less of a pain in the ass. Right now, you've got 2 flavors of accounts on Ethereum: externally owned accounts, EOA, and smart contract accounts. EOAs are like that friend who always needs cash up front to do anything, while smart contracts are the rich buddy who can't leave the house without permission. Account abstraction wants to mash these together into one glorious, programmable super account. EIP 3074 lets EOAs delegate control to smart contracts with new opcodes, turning your basic wallet into a mini programmable beast. EIP 7702, cooked up by Vitalik and crew, takes it further, letting EOAs temporarily morph into smart contract accounts for a single transaction. No hard fork needed. Backward compatible with ERC 4337 and trustless to boot. The goal? One-click conversions of your old wallet into a smart wallet. No more seed phrase panic. No more signing every damn approval like it's a mortgage. Next story. CoreDAO is trying to boost its BTC-Fi or Bitcoin finance by dragging more Bitcoin into the DeFi party without making it leave its cozy lair. One home. The pitch? Stake your BTC, earn yield, and keep your precious sat secure while they work for you. Core's been banging this drum since 2023, building a Layer 1 blockchain that's Bitcoin aligned but with a twist. It uses a Satoshi plus consensus, blending Bitcoin's proof of work with delegated proof of stake. Translation: miners and stakers play nice together, and you can stake your Bitcoin or Core tokens to secure the network and earn rewards. You lock up your Bitcoin through Core's non-custodial staking protocol, meaning you keep control of your keys. Return, you get SDBTC, a tokenized version of your staked Bitcoin that you can use in Core's DeFi ecosystem. Think lending, borrowing, or yield farming on their chain. The network's processed over 250K Bitcoin in staking volume since launch, and they're boasting 20K active stackers as of early 2025. Rewards come from transaction fees and a slice of Core token emissions. 10% of the total supply is earmarked for Bitcoin staker over 10 years. Not bad, right? Annual yields are floating around 4 to 6%, depending on network activity, which beats letting your Bitcoin gather dust in a cold wallet. Last story, Babylon is rolling out their baby token with a splash. They're giving away 6% of the total supply, which clocks in at a cool 600 million tokens, to 5 groups of early supporters. The big winners? Bitcoin staker and GitHub contributors, though there's some love for Pioneer Pass NFT holders and social media shills too. The Babylon Genesis network launched today, and if you register your baby address, those tokens are already in your wallet, no claiming needed, which is a nice change from a usual click this sketchy link airdrop nonsense. Let's break down the numbers. The lion's share, 200 million baby, goes to stakers who transition their Phase 1 to Phase 2. If you were one of the OG staking BTC since August 2024, congrats, you're eating well. Another 30 million baby is for Pioneer Pass NFT holders, 300 tokens per NFT, based on a snapshot from February 24th. And then there's 5 million baby for GitHub contributors who've been coding for Babylon's ecosystem. Open source devs who push commits before February 23rd get a slice. The rest of the 6% goes to social media contributors who shield Babylon from August 2024 to February 2025, plus some wallet campaign folks. Today's airdrop is Ethereal, a project that's trying to be the love child of a centralized exchange and a decentralized dream. What's Ethereal? It's a decentralized exchange, spot and perps trading, built on Ethena network, using USD as its native collateral. They're hyping a hybrid setup, on-chain security with off-chain speed, promising sex-level performance without the vibes of a centralized exchange. Think sub, 20 ms latency and 1 million operations per second. Numbers that sound sexy until you remember that DeFi biggest bottleneck isn't speed. It's North Korea. Ethereal's leaning hard into the Ethena ecosystem, which means USD stablecoin integration and share liquidity. Great if Ethena moons. Less great if it turns into another Terra Luna. Now, the juicy part. Ethereal Season 0 campaign. You deposit USD, get EUSD receipt tokens, and start earning Ethereal points based on how much and how long you stake. The more you lock up, the more points you get. Early birds and whales get the worm, basically. Season 0 runs until their mainnet launch in May 2025, and those points might get you priority testnet access, governance rights, or, fingers crossed, a fat airdrop, and you get a 30x boost on Ethena sats. So you're double-dipping rewards across both ecosystems. That's everything I got for you this Saturday. See you guys back here tomorrow.